Here again, your instructor, none other than CPA Rono. Today, I want to welcome you back to this 2025 year by doing a question of cash flow statement, which was done last sitting. That is last sitting, December 2024. This question was question number 3B. Number 3B. It is the statement of cash flow or the cash flow quotient. Don't forget IAS 7. So let's have a look at the question. So this is the question. The questions rate that Roda Limited manufacturers high quality shoes. The following are the financial statement for the company during the year ended 31st August 2024 and 31st August 2023, which it will remind us that for every cash flow statement, you must be given the two comparative years. So we have the income statement, which we have been given the sales there. We have the balance sheet. We have the balance sheet also in two comparative years. In two comparative years also. And the requirement is that the company made additional information number one before even the requirement. Additional information number one, we have been told the company made a profit. The company made a profit. The company made a profit of 34,320 on the sales of a machine whose cost was 466,986 and whose accumulated depreciation was 102,986. And then note number 2, the only revaluation made on non-current asset was for the freehold land. Required the statement of cash flow for the year ended 31st August 2024 in accordance with the International Accounting Standards IAS 7. IAS 7, that is the statement of cash flow. The statement of cash flow. So what do you need to give this examiner? So it is very important. So the key thing in when it comes to the cash flow statement, come to the cash flow statement, is to have the format of how to prepare the cash flow statement. So you will write the name of the company, which is the name of this company is Roca Limited. So you will write a Roca Limited. The statement of cash flow for the year ended 1st August 2024. For the year ended 1st August 2024. As usual, we normally start with the profit before tax. You normally start with the profit before tax. So you will go back, you go direct to the income statement, which you have been given. The net profit before tax is 2549,404. So we have 2549 404. What do we adjust here? We adjust non-cash item. So adjust or adjustments. So this adjustment, we have non-cash item. One of the non-cash item is finance cost. Finance cost. We add back the finance cost here. So also you go to the income statement. That is the finance cost. Do we have finance cost? Yes, we have finance cost of 410,800. 410. So we add a finance cost of 410,800. That is our finance cost. We also add depreciation if we have depreciation. We also add depreciation if we have the depreciation. Also, a profit on disposal. Profit on disposal. Already examiner has given us the profit on disposal. Examiner has already given us the profit on disposal, which it is on note number 1. The company made a profit of 34,320 on the sales of a machine. So we don't need to worry about other information. We only take the value which we have been given as a profit on disposal. So I will come here, subtract the profit on disposal of 34,320. 320. Why are we subtracting here? Why are we subtracting here? That is a good question. Why are we subtracting? The accountant has recognized this as an income. The accountant has recognized this as an income, and yet there is no cash movement. There is no cash movement. So what happened to the profit? This profit has been overstated by this value. So we'll have to subtract. That's why I'm subtracting. What about the value of depreciation? What about the value of depreciation? So I have to open a provision for depreciation account. So I will come here. Open account for provision. I will open an account that is provision for depreciation. Provision for depreciation, very important. Provision for depreciation, very important. Look at your balance sheet. Look at your balance sheet. Examiner has given you two options: the net value and the cost value. So which one are you using? Decide. If you decide to take the cost value, go with the cost value. If you decide to go with the net book value, go with net book value. But when it comes to the provision for depreciation, then we go with the net, what examiner has given us. If you go to the balance sheet, they have given us in a net book value. They have given us in a net book value. That is in note number, that is in the balance sheet. If you go to the balance sheet, we are seeing that we have the net or non-current asset, which we have accumulated depreciation. So for 2023 and 2024. So for 2023 will be balance brought forward. That is accumulated depreciation of 66. I've seen 66. We have 66. We have 66. 07. 66. 07. 874. 874. And then for the 2024 is the balance brought forward, which is 7695. 7695. And 142. 142. 7695, 142. And then we debit the one which they dispose. The one which they dispose for the asset which they dispose. It is in the note number 1, which we have been told the company made a profit on of that, and whose accumulated depreciation was 102,986. So we eliminate that. We debit. We eliminate that. So whatever it is, the balancing figure here will go to the P&L. So the balancing figure here is what they have recognized in the P&L. So let's take addition of this, which is 102,986 plus 7695, 142. This one's giving us the total of 77, 98, 128, which will be the same here. 77, 98, 128. So subtract this. So minus 66, 07, 874. So we are getting 1190, 1190, 1190, 254. So this is the balancing figure. This is the balancing figure. So this balancing figure is the depreciation charge for the year. Is the depreciation charge for the year, which it has affect, or it has an effect on the profit before tax. They have already subtract this value. So we'll have to add back here. So we'll come and put that value of what? 1190, 254, 1190, 254. So I think with this, we have already done to the adjustment of non-cash item, unless otherwise, then we'll have to do another adjustment. So after that, we go straight to the working capitals. Working capital. So for working capital, we have receivables, we have payables, and inventory, So either increase or decrease of these three, then you will have to do the adjustment. So we look at for the receivable. For the receivable, if you go back to the balance sheet, we have been given for the last financial year 2023, we have 4505,864, and for the current period is 31,150. So there's a slightly decrease. So there's a slight decrease in receivable. So what happened when the receivable decreases? It means the customers has paid, or the customer, they have paid their dues. So which means it increases our cash inflow. So it will. So take 45,004, 864 minus 32, 31, 150. So we have an increase of 127, an increase of 127, 37, 14. So it is the cash inflow. So we leave as a positive. And then to go to the account payable, or we can finish with the inventory because it is on the same 696. And for the current period, we have 85, 82, 288. So there is an increase. Which means they put more inventory. So they spent a lot of cash purchasing this inventory. So it is the cash outflow. So let's take the difference. So I will check for the last financial year, or the current year, 85, 82, 288 minus 75, 73, 696. So we have a difference of 185.92. 185.92. So this is the cash outflow. That is the cash outflow. Let's go to the payable. Payable, it is under the current liabilities. So go straight to the current liabilities down to there, which we have trade payable. For the last financial year, it was 56,694,624. But for the current period, it is 49,42,860. So there's a decrease, which means we pay our dues on payable. So which means we spent more cash on paying our debtor or our creditors. So that is the cash outflow. So let's take the difference. 56.94, 624 minus 49.42, 860. So we have a difference of 75, 17, 64. It is the cash outflow. So after this, we'll have to subtract the tax paid. So say less tax paid, less tax paid. How do we calculate the tax paid? How do we calculate the tax paid? Very simple. How do we calculate the tax paid? So if you go back to the balance sheet, we have provision. We have the provision for the corporate tax. We have the provision for the corporate tax. So we have the corporate tax of 674.02 024. That is for 2023, which it will be balance brought forward 674.024. 624. What about balance carried forward? That is the corporate provision for the current period, which is 627, 250. And then check whatever they have put in the P&L. Check whatever they have put in the P&L. So we have what is in the P&L here as a corporate tax. It is there in the income statement. Go to the income statement. The corporate tax is 820,924. So we have 820,924. So the balancing figure, my good listeners, my good learners, is the tax paid, which will fall under the debit. The tax paid, which will fall under the debit. So I will take whatever it is there in the credit, 674, 024 plus 820, 924, which is giving us the total of 149, 49, 449. I'm just reading the numbers. I'm not. This is 149, 494, 8. So subtract this minus 627, 250, which you are getting 867, 698, 698. So this is the tax paid. That is the actual tax paid, which you will come and subtract here. 867, 698, 698. Don't forget, under the cash flow, we only have the 3 elements. So we have done to the first element, which is the operating activities. We have done to the first element, which is the operating activities. So let's go to the second element. Which is investing activities. And provided that we have seen the additional information, we don't have a lot of information, which means our investing activities, we don't have a lot there. So we'll have the second element, investing activities. Investing activities. What do we normally capture under the investing activities? We normally capture the proceeds or the cash proceeds which we receive from disposing our assets, or the cash paid to acquire some of the assets, or the dividend we received from other investment. So, but the examiner will not provide you this. You have to do the workings so that you can able to identify some of these investment activities. So we can start with the additional information number 1, which the examiner has given us the profit on disposal, which is this. They have also given us the cost of the asset they dispose and also the accumulated depreciation. So with those items, we can be able to get the cash proceeds. Or you want us to open the disposal account, we can open so that you can understand. So we have disposal account, which We have the asset disposed, the cost, which is 466. Which was that value? Do I still remember? No. So it is 466 986, and that the accumulated depreciation is the 102, which is, it was there, 102 9 102 102 9 102 986, and then the profit, which I have it here, 34 320. So the balancing figure, which will be on this side, is the cash. The balancing figure is the cash. So I will take that 466,986 plus 34,320. I'm getting a total of 501,306. So subtract that. Subtract 102,986, so that we get 398, 398, 398, 320, 398, 320. So this is our cash proceeds. So you'll come here and write cash proceeds of 398, 398, 320, 398, 320, 398, 320. So we have done with that. We also need to open the non-current asset account, so that you can be able to see whether this company called Roga Limited poured some non-current asset during the year. So we'll also open our account called non-current assets account, Now, this is where I was talking about that if examiner give you the net book value, you should go with the net book value. If the examiner has given you the cost, you can decide to go with the the 2. If you decided to go with the cost, go with the cost. If you decide to open account with the net book value, open with the net book value. At the end of it, you will get the same value. At the end of it, you will get the same value. So it is very easy to open with the cost. Which I will capture the balance brought forward here. And I will capture the balance carried forward here with the cost value. So go to the balance sheet element. Go to the balance sheet element, which we have non-current assets. So non-current asset with the cost for the last financial year, we have 27,833,208. So we have 27 million 833,028. Is it that 028? Yes. No, not 028, but 208. No, it should be on this side. 27,833,208. And then what about the balance carried forward? Those are the costs. So don't confuse yourself. And that we have 33,930, 33,930, 33,930, 702, 702. And then this is the cost. So we will eliminate the one which they dispose. Come here called disposal. But at the cost value, which I can still remember, 466,986. And then look at the note 1. Note 1, note 2, we have been told the revaluation. The revaluation is part of the freehold land, which freehold land is non-current asset. So the difference between the revaluation, is the value of this non-current assets. So if you go back to the balance sheet, the revaluation reserve, is it an increase or a decrease? It is an increase. from the last financial year was 2,127,840,000, but for the current financial year is 3,876,008. So there is an increase. So it is a revaluation upward. So let's get the difference. Let's get the difference. I will take that 876,080 minus 21,27,840. So we have a difference of 1,748,240. So that is a revaluation gain, a revaluation of 174, 240, to 40, which is still, by the look of these figures, this value is still more. So the balancing figure here is the cash. The balancing figure here is the cash, which let's take the total of the credit side, 466,986 plus 33,930, 702. Yes, so I'm getting that total minus 27,833, 208. I'm still getting a lot of figures. So let's do the addition again. That 390, 702 plus 466,986 minus 27,833, 208 minus 174, 8240. So I'm getting a difference of 481, 64, 40. So this is the cash they used to acquire this non-current asset. So come here and say cash paid, which we have 481, 6240. So don't remember it is a negative. Don't remember it is, or don't forget it is a negative. So we have done with the investing activities. We have done with the investing activities. So we go to the financing activities, which is the last element. The last element is financing activities. The last element is financing activity. So write financing activities. Financing activities. So for these financing activities, this one, we don't need to open a lot of working. We just need to look at the values. We have to look at by observing the changes. So we'll go back to the last part, the capital and liabilities. Ordinary share. 2023, we had 7.8 million, but 2024 is 10.92 million. So there's an increase. So which means it is an increase in share capital. So ordinary share capital, there's an increase of how much? So take 10.92 minus 7.8. So we have an increase of 3.2 million, which is that you want 20. Yeah, 3.12 million. So it is the cash inflow. That's why it is a positive. That's why it is a positive. Don't forget, this question is for December. This question is December 2024. Last sitting, December 2024 question 3. December 2024 question 3. Now, we have the share premium. We have the share premium. The share premium also, I think it is an increase. It is an increase in share premium. 2023 was 4.0 and this one is 4.1. Yes, so it is an increase. Take the difference. The difference for share premium also. 4103, 840 minus 4038, 814. So we have an increase of 65,026. 65,026. We have the loan repayment or the debenture repayment. Debenture repayment. Debenture repayment. Debenture repayment, if you look at it, was that is 12%. It was 4.5. Now it is 3.5. So there's a decrease in debenture. So they have repaid a lot of debenture. So we take the 4589,000 minus 3501,680. So there's a repayment of 108, 7320. So don't forget it is a subtraction. Don't forget the finance cost. So you add back here and also subtract under the financing activity. So we have the finance cost of 410,800. Subtract. That is very important. Do we still have any other financing activities? Do we still have any other financing activities? I don't think so. So then we can now do the summation. Summation is very simple. So the first one is A, the second one is B, and this one is C. So this one is matter of just A plus B. So this is addition. So let's get first the cash flow, the net cash flow from the operating activities, which I will take 249, 404 minus 410, 800. Not minus, plus. This one should be plus. Plus 410, 800 plus 1190 or 254 minus 34 320. So I'm getting a positive figure, of 411 61, a positive figure here of 411 61 38. So adjust this one because this is one element. So add this, subtract this. So plus 127 3714 minus 75 1764 minus 185 92. So I'm getting 362 94 96. So subtract the tax, minus 867 698. I'm getting 276 getting 276 1798, and that one we call it A. So it is the cash flow from operating activities. Let's get for the investing activities. Which is 398 320 minus 481 6240, getting a negative of 44 71 920. This is a negative. That's a negative. So once you have that, we call it, this is the net cash flow from the investing activities. You can write that one. I don't have enough space to write, but this represent B. And then we go to the last part, the cash flow from the investing activities, which is that 120 plus 65026 minus 108 7320 minus 410 800. So we are getting 168 69 69 6. 1686, that one. So this one we call it BC. It is the cash flow. That is the cash flow from financing activities. So let's get the cash flow for the year. Cash flow for the year. The cash flow for the year, I will take A plus B plus C. So I will take 27, 61, 78, 798, sorry, plus, we can take this because it is a positive, plus 168, 69096 minus 44, 17, 920, which will give us, that one will give us a total of 30,780. 30, this one will give us 30,780.84. So it is a negative, it is a positive value. And then you take the cash and cash equivalent at the beginning. Cash and cash equivalent at the beginning, you just go to the balance sheet. What was the cash and cash equivalent under the current assets? So it is at the beginning 278, 480, 278, 408, 278, 408. So if you add these two, if you add that two, you should be able to get our balancing figure or the closing figure, 878 plus 278, 408. I'm getting 30, 309, 192, 309, 192, which is this one is cash and cash equivalent, at the end, which it should be the same with your cash and cash bank balance at the end. So when you look at 2024, it is 309, 192, 309, 192, the same figure, and that was 16 marks. That was 16 marks for the last sitting paper. The question was very simple. It just needed to have a confident and you approach with an open-minded. So don't forget that we have already started our classes for the CPA, and we only charge the 4,800 per unit. So join us today and we start preparing for this exam. For April exam 2025. So thank you so much, and make sure that share to your friends, your colleagues who are starting this CPA journey, and we are here to help. them. So thank you so much.